Someone told me who I respect in the space that one of my, I would call mentors, is saying, in multifamily, you're a problem solver. That's just the core of what it is, right? You got to figure out how to be a problem solver. And if you're not, you're probably not going to be real good in this space because there's always problems. Every property has something and you need to figure out how to solve it. And if you're good at doing that stuff, you should have a pretty good track record in this space.
Welcome to the Average Joe Finances Podcast. Are you trying to get out of debt, invest, or just not sure where to start? Then this is the place for you. We discuss different ways to get out of the rat race and build your wealth. Join us on this wild ride to financial freedom.
Hey, welcome back to the Average Joe Finances Podcast. I'm your host, Mike Cavaggioni, and today's guest is Vince Scolari. So, Vince, thank you so much for joining me today. Welcome to the show.
Thanks, Mike. Yeah, good to be here.
Awesome. I didn't ask you before we started, so I just want to make sure. Did I say your last name correctly?
Scolari, yep.
Perfect. Yeah, I'm Italian, so I think I was able to figure it out pretty good myself. A lot of people mix up mine as well with Cavaggioni. They're like, you're trying to figure out how to say it. And I'm like, it's said exactly how it's spelled.
Yeah.
All right. Awesome. Thank you so much for joining me. The first question I'd like to ask you is the same question I ask everybody that comes on this show. And we want to know more about you. So if you could share a little bit about yourself, what's your story? Who is Vince Scolari?
Yeah, absolutely. So Vince Scolari, Lawrence Rose Capital is my company, which is named after my oldest two daughters. We're based here in San Jose, California. A lot of roots here. This area is typically now known for transplants, but we are actually fourth generation in the Bay Area. My great grandparents came over from Italy in the late 1800s and have been here ever since. When it was before supercomputers and chips, it was a really good farming country. Yeah, been here for a long time, tried to escape several times and still stayed because our roots are probably so deep that it's hard to leave. That's the gist of me.
Awesome. So they came from Italy and went to California. Yeah, very interesting. It's been like the standard thing when you think of the people that come from Italy and wind up in the States. They all went to New York and New Jersey. Yeah, it's interesting that they chose California, but like you said, it was all farmland and everything like that. I know my grandparents immigrated over, same thing, where they moved to on Long Island, New York, particularly picked the spot that they picked because they were able to have a farm there. Now Long Island is like just densely populated and everything's built over. My grandfather had that farm up until the early 2000s. So it was pretty interesting before it finally went away. Yeah, that's really interesting stuff. Okay, family planted roots in California. That's where you're at right now. And that's where you've also planted your roots. But what's it like being there, especially in the Bay Area and trying to invest in real estate?
Hectic.
I bet.
We're in a very unique market in that obviously we have one of the higher end real estate markets in the world, definitely in the US. It's consistently up there in terms of cost and appreciation fact. So it takes a lot to be in the market. We're somewhat in and then somewhat out in terms of how we diversify our holdings. It gets complicated because you have to look at it from a different lens than you would some other areas, basically. It takes a lot of capital to be here, that's for sure.
Yeah, I bet. Just the Bay Area in general, just every time you hear of stories about how expensive some of the most expensive markets in real estate are, the Bay Area is always one of the places that comes to mind. What's funny too is like you don't hear a lot of people talk about how where I live at in Hawaii is being one of the most expensive areas, and it is. But if you look at all those lists, you never see Hawaii on there for some reason. It's really weird. But okay, I also live in an expensive market, so it's been one of those things that as I started investing in real estate, I looked outside of where I lived at. I looked far beyond the reaches of Hawaii and looked back on the mainland and started investing out of state. So is that something that you've explored as well?
Yep. Actually, that's pretty much predominantly where we've gone with it, just because of the limitations here in California. We still have some holdings, again, as I mentioned here, but they're from years ago that have just tailed through. There's just a lot that you have to get through in terms of rent control, landlord laws, and things that just, there are more barriers to entry. It's not that it can't be done. You just have to take a little bit different approach. And when we were starting to really put a lot of energy into real estate, we wanted to take a little bit easier path to get through some of these things in order to get our assets up and going and operating for us, basically. We chose to start diversifying outside of California for those reasons.
Okay, right on. So what kind of markets do you focus on?
So we have a pretty heavy presence in Arkansas, the Little Rock area. We have some our most recent acquisition was actually in Denver, Colorado, and then in Arizona as well, Tucson, Phoenix area.
I know a lot of people that started investing pretty heavily in Arizona. As a matter of fact, I went to a conference out there earlier this year, and a lot of people that were there were like, Yeah, we came to this conference because we also wanted to check out Arizona and check out the area because they had a high interest of investing there. But not only that, but it's also been one of those states where you see a lot of folks migrating to particular areas like Phoenix. What was the other one? Like right outside of Tucson. So you see a lot of spots like that. Mm-hmm. So it's interesting because you have a lot of, I guess, higher net worth individuals moving out of these larger city areas, like moving out of the Bay Area, moving out of Manhattan and stuff, and trying to get somewhere where they can retire, and they're picking these spots. And one of the things that I think a lot of investors are seeing is the benefit of that is because of the larger influx and the more money coming in, rents are going up, the price of the assets are going up. So as when you're in there and you're scooping those up, it's putting you in a pretty good position for the future. And I like talking about that a little bit because when we talk about real estate, we like to talk about the future, right? A lot of people think, oh, if I start investing in real estate, I'll be rich in a couple of years and blah, blah, blah. It's not about that. It's about building wealth within the 5, 10, 15 years down the road. That's always what you're looking at. So is that something that you've found that you got into these markets and you're starting to see when you picture what it's going to look like 10 years from now? What is it that you're seeing?
Yeah, it's a great point. And that's definitely goes into the whole lens of what you're looking at and where you're trying to go, especially if you're focusing. It doesn't matter where you are and what area you're investing in, but you should have a pretty good idea of the economics of the area. Real estate is a very hyper-focused block by block type of investment. And if you don't know, you can think about just whoever's listening, your market, right? You can think of the areas that are good areas, are okay areas, and are bad areas, just based on the stuff that's going on in those areas. And you want to know that. And if you're looking at a particular market, you need to really dig in and research that information and find out where those pockets are that, you want to invest in. And I'm not saying you like a bad area is something you couldn't invest in, but you better have that lens going into it and know you don't want to go into it expecting, wow, this is like a great area and then have it not be such a great area because that changes the whole dynamic of that property.
Yeah, you can't treat it the same.
No. So yeah, you definitely, it's a good place if you're starting is to have those views of the areas and then continue to break it down into the different pockets. And that's ultimately how you're going to find opportunity, right? And that's what we pretty much do is find value add investments, stuff that is in an area that's showing those upward trends in population growth, household income growth, just certain things are going in that area. There's a brand new mall being built, or it's an old school property that's been there. It's got a lot of good demographics, but they're building a brand new class A across the street that's going to uplift the area and things along those lines where you get into those little things that are going on within that city or county that are going to help the area.
Yeah, Vince, that's awesome. I was going to ask you, that was going to be my next question for you is what are some of the key factors you're looking for when you pick a market to start investing in? But it sounds like by the way you're describing your investments is you invest in multifamily.
Yeah.
So are you doing syndications?
So we have our wholly owned stuff and syndications as well. So it's just we're doing more and more syndications these days because you start getting that traction and then you don't want to turn down really good deals. So you find ways to make them work. And syndication is a great tool in the toolbox to continue building on that momentum. Being in the real estate game, it's hard to get started, but once you do, you start building that credibility and that helps your momentum. And it's like one on top of the other, you just keep stacking and it builds that momentum and those tailwinds it becomes a lot easier to get that traction. But you got to learn to use the different tools in the toolkit. And ideally, some people just have different ways of starting out. We were looking for our own deals starting and we built that, but then you run out of your own capital after a while too. You have to find ways to replenish that and continue to make the deals work with what you have. And so we had the experience and the know-how. So we just needed to backfill in with being able to raise capital and do that. And that's what ultimately led us to the syndication portion of it.
Okay, right on. Now, so you said you're doing syndications, but you're also doing like your own thing as well. So are you talking about, is that also multifamily? Are you doing JVs with partners? Or are you talking about like you're picking up some single family homes or anything like that?
No, it's all multifamily. So yeah,
okay.
Most of our stuff these days are joint ventures. We have stuff that's basically how it got started was through family, got into a joint venture with family and kind of just kept trading in and out of stuff there. So we have that portfolio that's building. And that's how I started getting actually kind of trial by fire. You fall into it. And I was working with my aunt who had been doing it for a long time and she's really good at it. And so it was like, okay, we're learning from this and taking the next steps and then building from there. And then it was like, now we get some additional capital from sales and windfalls that we had and let's go do something on our own and just keep stacking from there.
Yeah, that's great. So you've had real estate in the blood, right? Because it's in the family. And so you said your aunt's been doing it for a long time. So I was going to ask you, like, what made you start looking at real estate as an asset class to build wealth? But it sounds like it was embedded in the family. So how did that work for you? Like when you decided to get started, did you like approach your family members and say, hey, I want in? Or was it like they hit you up and said, hey, come on over? Like how did that work?
Yeah, it's a great question. It was actually more of the latter. So I was working hard out of college, a young kid. I've always been somewhat financially frugal and saved. I always was a saver, right? So putting money away and doing all the right things in terms of my credit and not overspending, living all the stuff that you should do. And we were sitting around family dinner and she was making a big exchange and was like, we've got this extra little room, a 1031 exchange that she had. And we've got this room on this deal here in the Bay Area and we open it up to you guys. If you want to partner up, we'll do a joint venture. And so I was like, sure, I got all this extra cash and I knew real estate was a great wealth building tool. Never done it before. I really didn't know anything about it. Was just like, here, do this and going along, checking it went for, so that first investment actually was kind of eye-opening because it was like 2007. So right before the big crash. But my aunt really knew what she was doing. And that investment, actually, we ended up selling it like 2014, I think. And it sailed really well even through the financial crisis because we bought it. It was a very good value add opportunity. But long story short, I started seeing these little dividend checks and it was like, oh, okay, this isn't overly sexy, a couple of $100 here and there. But then we sold it and it was like, you get this big windfall and it was like, whoa, okay, now I can see where this is going. So that really opened my eyes up as to the power of what real estate could be. So I forced myself to really dive in and educate myself on real estate. So I started going down the path of, that's when podcasts were becoming really popular and started listening to the Bigger Pockets Avenue and getting on the forums and starting to try and network and go out to people. And then that's what really escalated my journey as I started self-educating myself and then finding the right things that I wanted to invest in and how I wanted to invest. And then you continue to steamroll it from there and find partners and so on and so forth.
Yeah, that's great. So it's funny because you had your aunt that put the bug in your ear for real estate, right? And in my family, it was actually my uncle who actually put the bug in my ear. And it's always been back there. And when I finally started doing it, like the first person I called to say, hey, this is what I'm doing was my uncle. And it was really cool. And I was like talking with him over the phone, running numbers with him, saying, hey, does this make sense? And he either told me if I was stupid or if I was doing something good. It's really funny though. Like if I like that because I can relate when it comes to the family member that got you into it, right? Yeah. Now, mind you, it took me a very long time to take action on it from the initial conversation that I had with him, probably 15 years before I finally took action on it. Yeah, a little different there. So you got into that first deal with your aunt, right? And then you said, okay, this is cool, right? You were getting the little dividend checks and then it sold. And were you doing anything else between 2007 and 2014, or did you hold off until like when you saw that windfall and you were like, whoa? Yeah, no, I like you just was like, all right, and I didn't really it never really clicked. So it was just like, okay, I'm tucking it away. I'm not thinking about it. That building down the street that my nose, look, it's still standing, right? It's there. That was about as far as it went for me. It never really registered. And two, you don't really, as a younger professional, I just didn't understand the tax effect of it either. So those things didn't start really clicking with me until after we sold the building. And then it was like, okay, like the light bulb went off and I need to start really going down this avenue, and then just went on a warpath, educating myself, meeting people, talking to people, even just networking with as many people that I knew were in real estate, talking to friends and other family members that were in it, and just trying to just keep like absorbing as much as I could about the lingo, the terms, the different types of structures, the different asset classes. And then you can hone from there. You can take that broad shotgun approach and just hone your skills down when you find what works and appeals for you. Yeah, no, Vince, that's awesome, man, because I'm taking notes as we're talking and stuff too. And one of the things I wrote down is how you said you're sitting here absorbing everything. I always tell people when you get into this and you're trying to learn, and as you're moving along, I always say, become a content sponge. Go out there and absorb as much of this stuff as you can and educate yourself as much as you can. But then on top of that, you have to go take action, right? You can't just sit here and learn, right? So you started going out and meeting people and networking and really putting yourself out there. Mm-hmm. And now look at what you're doing, right? And it's all because you chose to take those steps. You didn't just settle for I can get into a deal. The next one my aunt brings up at the dinner table, maybe I'll get in on that one. It was, no, I want to start going out and doing it myself, right? The bug bit. So you had the bug back there and then it bit you and you were like, let's go. So that's awesome. Now, when you started like educating yourself, so this was back in 2014, right? When that sold. I don't even think Bigger Pockets podcast came out until 2015, 2016? No, maybe it was 2014 when it came out. So did you get onto the forums first and you started checking that out and doing like webinars and things? What did you do to start learning more at the very beginning?
Yeah, I set up account, Bigger Pockets, started reading the forums like aggressively every day. I think they started the podcast around that time. I started searching around for other podcasts that spoke about real estate and started listening to them on my way to work. I started reading I went to the bookshop and started buying books on real estate, found as many as I could, and there's a ton of them out there. And so just started reading and getting the knowledge and trying to absorb as much as I could about how everything works and just getting your comfort level to the point where you could actually go out and start speaking to people about making a transaction. And then from there, I like your comment is, yeah, you can sit there and absorb it and be a sponge, which you need to do because you need to know that. But if you don't do anything with that information, it doesn't do you any good. So I knew the next step was I needed to go out and take action. So I went out and was looking for a market. So I didn't want to be in California. I'm still a younger working professional this time. I didn't have a ton of capital. I had a decent amount of capital, but I knew I needed to focus my energy out of state. So you started researching areas and started talking to people on the forums, and I ended up landing on Columbus, Ohio. It was a good market that I thought would be a place to start investing. So I went out there and flew out to Columbus and did a market overlay and started talking to some brokers that I'd met via Bigger Pockets and recommended, started making connections from there and lenders and so on and so forth. And we ended up buying a building on our own, a 10 unit. It was out there, and it was a lift, a value add, fairly heavier lift than we anticipated.
The first one usually is, right?
Yeah. And I tell this story because ended up being like almost over our head, right? And you're grinding through it and managing different things. And I remember nights where I was like pulling my hair out of my head going, I made the biggest mistake in my life buying this building and trying to manage it from 2,500 miles away. And you get through these grind periods on something like that. And then you start seeing the light at the end of the tunnel. And it's, okay, we're getting there. And it ended up being a pretty good investment for us. Not great, like not a home run, but we sold it for a nice profit and walked away from it about 2 years after we bought it, after we fully turned it and fully got it back up in market. But that was probably one of the best experiences as well. You getting in and just figuring things out as it's happening on the fly. And it was all on me. I didn't have any partners on that one. It was just my wife and I grinding through this and managing all of these. There was 10 units. It wasn't like a ton of stuff, but there was contractors that we were having to manage, our property manager, and getting things leased up and figuring out how to get it to a full operational stage. When we took it over, I think it was 7 of the 10 units full. We dropped down to 3 total tenants in the whole thing at one point and then brought it back up. Yeah, it was tough. And so again, things you learn going through all that, and it's, oh man, taking notes and then grinding through it. But again, at the end, it ended up being a nice, I'd call it a base hit for us. It wasn't a huge home run, but it performed well, started cash flowing really well. And then we sold it for a nice little profit. For 2 years doing that and going through that grind, it was well worth it just in the educational purposes, because then that led us to our next deal. And there we had the tools in place to really get through some of the hurdles that come with just doing a value add turn and getting those things that come, dealing with those things that come up in a building that you're trying to reposition, basically. That was definitely worth its weight in gold in the experience.
Hey everyone, Mike with Average Joe Finances. The Real Estate Wealth Builders Conference, aka RubeCon, is on for 2023. It'll be May 4th through the 6th in Phoenix, Arizona at the Sheraton downtown. I'll be speaking again this year, and I want to see you there. This year I'm doing 2 speaking events, one about growing your investor network through podcasting, and the other is about investing while in the military. We have some great speakers lined up, so you don't want to miss this conference. Visit averagejoefinances.com/RubeCon, REWBCON, or the link in the notes below, and use promo code Mike for discounted tickets. See you there.
What's going on, everybody? So today I want to talk to you about Buzzsprout. The Average Joe Finances podcast recently switched over to Buzzsprout, and I got to say, I am super happy with the progress. Our podcast is now on every single major platform and reaching audiences that we couldn't reach before, which is just super awesome. So thank you to Buzzsprout for being such a great platform, but also I want to say, hey guys, if you sign up for Buzzsprout and you sign up for one of their paid plans using our link, you'll get a $20 Amazon gift card. So go check them out. It's averagejoefinances.com/Buzzsprout, and we'll make sure the link is in the show notes below. Let's get back to today's episode.
Yeah, Vince, the baseball reference is perfect for things like this, right? So that first one not being a home run, that's fine, right? Because you're not always going to get that home run in real estate. But guess what? If you get enough base hits before you get 3 outs, eventually those RBIs are going to be coming in.
Exactly.
You're going to be bringing that person that you put on base home, and it's going to be a win in the end. And that's what it turned out for you guys, right? But not only that, but you got an expensive education right up front, right? So you're able to knock that out, learn everything, and really lock in and get those systems in place. That second property that you purchased, now you've got everything in place, and this could be a double, triple, or maybe even a home run. So I'm curious about that. So the very next deal you went into, right, after you got all this experience and what you learned from that first one, what did you take with you to that second deal, and how did that one turn out?
Yeah, no. So the number one thing that I took away was I got to find a way to get some partners, because doing it myself just was overly stressful. I was working, just trying to manage it in my spare time, and it was overwhelming. And so I knew I wanted to continue to build on this and then get into larger and larger properties. But I just quickly came to the realization that you can't do it by yourself. There's too many things going on, and you got to go find someone that you can partner with and help do some of the things that maybe you don't do as well, and could be a little bit quicker on some of this stuff. And then just as the day fills up, they can get to certain things and you can get to certain things, and it just becomes a partnership, and it makes the whole engine move faster. So you have to get over that I'm going to do it myself entirely mentality, and go find people that you can work with to continue to drive the train forward.
Yeah. So Vince, what's that process like then? Because I've had several syndicators on the show, right? And we talk about some of their deals. We talk about how they got into it and everything, but we never really talk about, for you, what's interesting is how you started off doing JVs and then you got into syndicating, right? Mm-hmm. And what was that process like when you initially started building that team for that first syndication deal? I think because there's a lot of people that listen to the show that might want to start syndicating themselves and become GPs, and they want to build that team. So what was it like forming the team? How did you meet the people? How did you convince them to come on board with you on this crazy ride? Spill the beans, so to say.
Yeah. No, it's intimidating for sure, because unless you're people that are in your area that are on the same path as you, and you can, all right, we work together well and we can do this. You're finding and meeting people for the first time and developing relationships and just seeing what works. So one, you have to get yourself out, start going to meetups and conferences and join communities to start networking with people that are like-minded and want to go on that same path as you, because in a way you're narrowing the playing field way down, because these people usually are all on the same boat going in the same direction. So finding and meeting those people, but be patient with it too. Relationships take time to build. It's not, hey, Mike, you and I met and we're all of a sudden going to be partners. Let's go and buy in real estate. It doesn't work like that. You really have to be patient with it and make sure you're meshing with these people and the philosophies are the same, and the way you handle business, yourself, your communications. And two, finding people that can work with your strengths. So you want to find someone who does something that you don't do so well, that will counter your abilities so that your team's stronger, right? If you're two people that do the same thing really well and not one thing really well, it's not really going to work as well for the team. You got so many different aspects to real estate and running these deals. It's good to have a few people involved in the asset management side, the acquisition side, the capital and relationship side of the investors. You got the underwriting and the banking side of things. And so these are all pieces that need to fit together and make everything go forward. And again, it works really well if you can find someone who's really good at the things that you don't do as well. And it makes your team that much stronger.
Yeah. Awesome, Vince. You have to find somebody that complements your weaknesses, right? Find the people that are good at the things you're not good at. It's as simple as what you said, right? And I say simple, but realistically, it's easier said than done. On paper, it looks a lot better. It's finding out if that person is the right fit. And how do you do that? You do that by building that relationship. So one of the things I wrote down that you said that I really liked was be patient, because relationships take time to build. And I think a lot of people get lost in the whole networking piece. Oh, I go out to events and I meet people and I talk to people. And just because you network and meet people doesn't mean you're building relationships. You've got to nurture relationships. So follow up, especially if there's somebody that you met that you're interested in possibly partnering with in the future. Go up with them. Ask them how their kid's doing, or ask them how the high school football game that their son played in went. Things like that. You got to remember those small things and actually show that you care and be interested in the person themselves, and not so much just looking at them as a potential deal in the future. And I think once people realize that, I was literally on a call earlier today talking about this with somebody when it comes to just building a relationship. Don't turn somebody into a number. Get to know them and understand them. So that's why I really appreciate what you said about being patient and building that relationship up. I think that's something that a lot of people maybe not fall behind on, but get lost in the whole piece of, I just want to meet more people and put myself out there. That's great. It's great to get yourself out there and build your brand awareness. But if you're building that relationship and nurturing that relationship, you're not going to have any partners. So I think that's huge. I appreciate that. Now, The other thing too, you said when you get yourself out there, meet like-minded people, that's who you want to build those relationships with, right? Something that you hear on a whole bunch of other podcasts and even here as well is if you're hanging out with 5 millionaires, you're going to be the sixth one. So as long as you're actually hanging out and being part of that crowd, you're going to acclimate and become part of that crowd eventually. So you got the first deal done, then you figured most of it out, right? Got into the second deal. You said, I need partners. I need to make this happen. So you went and found partners and the second deal happened. So how much better did that one go than your first deal? How that you had these systems in place?
Yeah. So our next deal was another JV deal, and it went, but we partnered with people that we were going along that path, and let's pull the trigger and see if this works out. And the next deal, we actually still own it. It's a cash flow machine right now. That deal is gone, but continues to go well, and we're seeing it's 100% occupied. It's never had any issues. It just keeps going. That's when it's kind of, okay, now you've set the base, right? And now we got to start taking the steps and keep going from there. And you start really working on continuing to build those systems and those learning moments, because you still run into stuff that you have to learn from in the process of. Actually, our second this second deal had some commercial space in it too. So that was a little bit of a pivot because it's not typically what we look for. This is, you're training your mindset on multifamily, but there's these little commercial tenants underneath. It was basically commercial and then apartments upstairs. And we had to figure out how to manage that and build those relationships to work the commercial tenants. So you got to always be learning and continuing to grow in your space. But you just have those moments where things pop up and you have to figure it out. You have to be nimble and figure out ways to work around it. Someone told me, who I respect in the space, that one of my, I would call mentors, is saying, in multifamily, you're a problem solver. That's just the core of what it is, right? You got to figure out how to be a problem solver. And if you're not, you're probably not going to be real good in this space, because there's always problems. Every property has something, and you need to figure out how to solve it. And if you're good at doing that stuff, you should have a pretty good track record in this space.
Yeah, I think it's more than just multifamily. I think just in real estate in general, it's about problem solving. Especially like you look at people that are wholesaling and flipping, they're helping solve people's problems that are underwater on the property or something, right? There's always some reason why they need to get rid of the property, or it's under distress somehow for some reason. And essentially you're coming in as the problem solver saying, hey, I will help you and get you out of this situation, right? And yeah, that's huge. As a real estate investor, you are a problem solver. Vince, this has been an awesome conversation. I'd like to transition this into something that I call the final round. It's where I'm going to ask you 3 hard-hitting questions so the audience kind of knows how Vince is under pressure, which I think we've got a lot of that out of just hearing about your first deal. So that's pretty awesome. But yeah, so if you're ready to get this party started, we'll go from there.
All right, sounds good.
All right, and there's one more question in there too, and it's more opinion-based. So it is 4 questions, not 3. I don't want to confuse people. For my listeners, you should know there's 4 of them. All right, but here we go. First question of the final round is, what's the biggest mistake you've ever made in real estate?
Yeah, so we touched on it a little bit earlier. I think that goes back to that first deal that I made, just going into it thinking I had to do it all on my own. It's hard for us to get out of that mindset. It's our capital, it's our hard work, and we want to do it all. And I think by far and away, that was my biggest mistake going into it, is not opening my mind up to partnering and developing partnerships versus just going into it thinking I knew enough to go in and make it work and it would be an easy, no-brainer deal. And I found out real hard that's not the case.
No, that's fair. And I find a lot of people that come on the show, and when they share about their first deal, for the most part, or just even some other deals in general, like one of the biggest things that they say that was the hardest thing for them was thinking that they had to do everything. And it's real estate. Sure, you can do it all yourself. It's going to be tough, but it's a team sport, right? It's a team sport. You got to partner up and make it happen. No, that's awesome. I appreciate you sharing that with us. Okay. So next question kind of ties into this, but what is something that you've learned that you wish you knew when you first started?
So obviously this would help to, I guess, curb any mistakes, but learning how to systemize things in real estate really help keep things going in the right direction, keeps you organized, keeps things just flowing. I've never traditionally been a straight up systems guy, so that was something I had to train myself to do. And the more I do it, the more focused and just easy things become. If you have systems in place to monitor the process and your steps that you need to take, again, we do value add, so there's lots of things that we need to track, whether our leases, when they're expiring, how are we going to get into the terms, when can we get into them, who's going in first, and what is the order in terms of the vendors that go in and need to make the unit turns, any major CapEx things we need to do, when do we need to do them, and how all that stuff needs to be kept track of, and how do we systemize this and then make it as easy as possible so we can continue to move forward as efficiently as possible. Because again, in value add, your time is a huge asset as well. And the quicker you can achieve your goals, the better the property is going to be. Whereas if you have those delays, there's always going to be delays. The more you can limit them, the better it's going to be in the overall. And that goes for a lot of things too, even deal flow, right? You can just track it to that as have a system to follow up with your brokers and what are you talking to them about, and how often are you talking to them about it? And your lenders, how often are you checking in with them? And your partner, you can just continue to build on that. But having systems in place that kind of make those wheels turn is always going to make things a lot easier. And that's something that, funny, because even in my other life and world I needed to do that. And real estate's the one that actually helped me do it. And it's helped me along the way in other things too. So it's been great.
Yeah, no, Vince, that's great. Having those systems in place is like you said, it's going to free up your time so you can focus on the larger dollar deals, so like the larger per hour dollar deals.
Totally.
And that's the important thing, because if you're spending your time trying to do like getting down in the nitty gritty of things that you can delegate that down to someone else by putting a good system in place, time is money, right? Because that is essentially what we do, right? We trade time for money. So how much money are you going to trade your time for, right? That's the question you need to ask yourself. No, I definitely appreciate that. Have those systems in place. One, it'll just make life easier, but two, you're going to realize in the long run, it's going to generate you way more profits. So awesome. Okay. With that, again, this third question all kind of ties into all this. Do you have any tips or tricks that you would recommend to someone that is just getting started today?
Yeah, I'd go back to our whole conversation about being a sponge. Do as much as you can, learn as much as you can. On your own, you need to self-educate, whether it be through podcasts. And there's so much information out there now that you can develop a pretty good baseline of education for free out there just by searching the internet and podcasts and all that. So put that effort in and build that baseline, and then figure out where you feel you might be good at in the overall real estate thing. Again, you're going to be able to niche yourself down into certain areas that may be able to add value. If you're doing it on your own, you need to find your path. But just circling back to the partnership thing, I think it added huge value to me when I figured out where I could benefit somebody and how I can add them. You get into this cycle that we're talking about is networking, and there's a lot of useless stuff that you're doing while you do that. And if you're not making it work to where you're adding value to you and someone else, it's not going to really get you anywhere. So find what you're good at or potentially could be good at, and adding value to a potential partnership or something like that is going to help tremendously. You could be, for example, if you're in a really good market that people traditionally are trying to go for, then you could potentially be a boots on the ground asset guy or girl. If you're really good at doing spreadsheets and numbers and stuff like that, then maybe you can be someone who can handle the underwriting on the team and help bring value that way, because plenty of people out there need really good underwriters, are good at communicator and good with people. You could be the asset manager and helping with that, and also help with, if you're going down the syndication path, help with capital raising side of the business and investor relations and things like that. Again, take that broad spectrum view, figure out as much as you can, and then try and figure out what your niche would be within the space and how you could add value to somebody and some potential partners or group that would accelerate your journey. Again, it's a team sport, and wherever you can find that groove is going to make it so much easier for you.
Yeah, Vince, I love that. Go out there, find your specialty, what you're good at, focus on that, and then bring that to a team. If you're bringing what you do well to a group of people that do other things well, that's just what adds to the success of the entire team. And if the team's successful, you're successful. Yeah, that's awesome, man. Okay, final question of the final round. And that is, do you have a favorite business, investing, or real estate related book or podcast, or both?
I'll take on the one that I'm really heavily focused on right now. Is I'm reading $100 Million Offers by Alex Hormozzi, who I started following his stuff. He's got a podcast as well, free YouTube channel, and he's big on a lot of the social media channels. He's more of an entrepreneur business owner, so it's a mindset thing with him. And coming from a real heavy sales background, he talks about just how you speak to people and creating a conversation that you can somewhat, it's like influence in things like that, just making sure that you're creating offers to people, whether it be in everyday life or in business, that make it hard to say no to, basically.
Okay. No, I love that. I wrote that one down. I don't think I've heard that book yet. And you said he has a podcast as well. What's the name of his podcast?
Let me double check it real quick.
I want to make sure I get that out there for my listeners. So always happy to share other podcasters that put out great content and great information.
It's
because
called
The Game. Okay.
The Game
Awesome.
by Alex Hormozzi.
Awesome.
His book's a good read too. It's quick. He's very precise and to the point. It's a fast read for a business book.
Good. I like fast reads.
He's very engaging. And then I'd recommend following him because he always puts out free clips and stuff. In terms of mindset and like focus and the way he does it, he's really good.
Awesome. Thank you for sharing that, Vince. Now, speaking of following and all that good stuff, I have to ask you the most important question of all. Now that the final round is over, I do have one more question for you. And that is, where can people find more information about you? If they want to learn about who is Vince and they want to learn more information, do you have a website, social media, anything like that you could share with us today?
Yeah, absolutely. So our website, lawrencerosecapital.com, has a ton of information, all our contact info on there. And that's LAURENCE. And then we're also on Facebook and Instagram as well. Feel free to give us a follow. And then my direct email would be my first initial last name. So Scolari at lawrencerosecapital.com. Anybody has any questions, feel free to reach out, connect. Love meeting people in the space.
All right. Awesome. Vince, again, thank you so much for coming on and having an awesome conversation with me. This was really a treat, especially to get down into the nitty-gritty of how to start a syndication. I really think that this is going to be a good value add to my listeners, especially those that are getting ready to get out there and get started in this space. So again, thank you so much.
Absolutely. Good being with you, Mike.
Yeah, awesome. And hey, to my listeners, thank you so much again for joining me today on the Average Joe Finances podcast with our special guest, Vince Scolari. So go leave us a 5-star review and tell us what you liked about today's particular episode with Vince. Aloha from Hawaii and have a great rest of your day. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.
Thanks for listening to the Average Joe Finances Podcast, your source for beating debt, saving money, and investing. Learn more at averagejoefinances.com.